The Bank of England just made their latest decision. They have left interest rates on hold at 4%. But alongside that, we heard from the governor, Andrew Bailey. And the funny thing is, when you're talking to central bank governors, often they talk in riddles. And so what we're going to do is listen to some of the clips, some of the things he told us, and then decode them in chart form. Here, first of all, is the governor on inflation and why it's so high in the UK. So inflation, 3.8%. Your target is 2%.
Yes.
It's the highest in the G7,
yes.
And it has been for quite a while. Does that give you some nerves, being an outlier there, the UK with the highest inflation?
Our job is to get it down to 2%, and that's what we'll do.
So the highest in the G7. Let me just kind of show you what we're talking about here, because perhaps you saw it in his eyes. I mean, this is something that definitely concerns any central bank governor. Their job is to try to keep inflation, this is the rate at which prices are rising, as low as possible, close to 2% in the case of the Bank of England. And look, there's the UK, red line, and there is the rest of the G7. So other industrialised economies in the world. There is no other member of the G7 which has inflation quite as high as the UK. That's a concern. But now, let's listen to the next clip, the governor talking about what might happen next. You are making a pledge that you're going to bring inflation down
yes.
to 2%.
Yes.
You're completely, and you think we're now past this hump, 3.8% is coming down now.
That's my expectation.
Now, the bank certainly does want and expect inflation to come down. And this is, again, it's the same line that we had before. This is inflation. That's the Bank of England's target. And indeed, when you look at their forecast, it does come down, lo and behold, to about 2% in the next few years. 3.8 there, coming down, 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 down. But here's the concern, OK? Look at expectations. This is kind of survey of what people actually think is going on with inflation, rather than just the outturned numbers. And here's what's striking. Look at where we are now. So those expectations are above average. And the more people think inflation is high and staying high, the more likely it might well be to stay high in the future. That's something that's haunting the bank. But anyway, now we can talk about the cost of living crisis.
When people think about the cost of living, as you mentioned, it's about the level of prices.
Now, this is the striking thing here. And there is this dichotomy, this difference between inflation, the headline numbers that we often hear about, and what we're actually feeling when we go out to the shops. This is inflation, OK? So this is the annual rate at which prices are rising at the moment, 3.8% right now. But here, as the governor was alluding to, there's an interesting thing. If you take these numbers and don't just look at the average annual change and look instead at the level of prices, because all inflation is basically a shopping basket of goods, there's a slightly different way of cooking these numbers. So that's inflation, OK? It's the difference between that point and that point. How much prices change, the level of prices change over the past year. And that is indeed, when you kind of join those two things, look at the percentage change, 3.8%. But if you look back, not just 1 year, but 4 years, and draw the line there, that's 24%. And for a lot of people, if you're going out to the shops, you might be thinking in those terms, gosh, this costs a lot more than it used to cost. Well, yes, it costs 24% more than it did 4 years ago, and it's much higher for certain other items. So these are some of the issues that are facing people. It's the cost of living crisis, which feels like it's going on, and then also it's causing concern. And here, you've got to look at something, the best kind of measure of this is disposable income. This is the rate at which households are supposedly getting better off each year, money pound in your pocket. And that has been going up. If you look just over the last few years, you're talking about that going up by about 5.8%. But here's the conundrum, and it's something the bank is trying to kind of work out at the moment. Look not at household disposable income, but instead at another measure. This is a measure of consumption, how much people are actually going out there and spending. And real consumption, if you just compare, kind of ignore the pandemic, but compare where we are now over the same period with 2019, and it's up by a mere 0.6%. Basically, it's flatlining. That is a real concern for the bank, and that has a bearing on its future decisions and indeed on interest rates. And here, finally, is the governor on interest rates.
I've used the phrase today, a gradual downward path, and I think that's a very good way of describing it.
So let's just compare where the UK is with other countries around the world, because this again, is significant, OK? So these are interest rates. Interest rates in the UK, kind of there they are at 4%. In the US, they're coming down there, and in the European Central Bank as well. And here is where they're expected to go in the next few years. Look, here's what's striking. In the next few years, the UK rates aren't coming down as fast as everyone else's rates. So not only do we have the highest inflation in the G7 right now, if these projections are to be believed, in a few years' time, we could also have the highest interest rates.